Well, in the world of commodities, it appears gold is the one to watch as predictions that it's set to hit its 10th consecutive yearly advance fuels investors' appetites. And it's not only investors coveting the precious metal, but central banks are also holding on to their reserves, which is setting gold on its biggest bull run since 1920. To find out more about what's driving the gold market, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney.
Okay, so central banks and the IMF, they sold 94.5 metric tonnes over the year, which is the lowest level so far under the central bank gold agreement. Is this just about keeping firepower available?
Whitney, it's more about diversification. Central banks actually want to hold more gold than they have in the previous years. And as a result of that, we've got this underlying demand from central banks. So it is firepower, it is holding, it's also offering security to the countries that they act on behalf of.
But could you say that this is just about global uncertainty, or is the market starting to really see some undiscovered inherent value here?
Oh, Whitney, there's always been value in gold. I mean,
but is there something that we don't know about that the market is grasping hold of?
Yeah, no, there is. There's quite a few things. Gold in itself has a very tight supply-demand scenario. And when you get a little bit of demand from other people, it sort of adds to that ability for people to want to hold. So it has that value, and it's going to continue, but more people are open to it. Central banks are open to it, depreciation of the dollar. So there's a lot more things that inducing people to actually buy gold. So there's still quite a lot of value in it.
But what is driving central banks to diversify in this scenario?
I think it's generally to do with the shift in global economics, where we centralise most of our economies on the US dollar. It's a move away from the US dollar and the depreciation of the US dollar, which we've had for quite some time. So it's more of a diversification that these central banks are following and in their need to actually have gold.
So do you think that this then signals a trend for central banks to continue down this path and really focus on other assets away from the US dollar?
Yeah, Whitney, I think it is. When you actually look at the holdings of some of the central banks, they are quite low. Some of the largest economies, when you look at China, for instance, their amount of reserves in the gold, was pretty much less than 1%. So they've got a mandate now to build up their reserves of gold. South Africa's another that really had none in reserve, and also Russia, another economy that really had no reserves or no gold actually backing any of their reserves. So it is this trend towards gold which is certainly underpinning the move higher.
If China shifts away from the US dollar and starts to put its money into gold, that's quite concerning for the US, isn't it?
Look, I think it is, but you also got to think that the US holds the most gold in terms of about 8,500 tonnes. So the US has always backed themselves up with the largest holding of gold. So it makes sense that these larger economies, China, who is number 2 now.
But if China shifts away from US treasuries, for example, and puts that into gold, that's concerning for the US.
Look, it is concerning, but they've got to buy an awful lot of gold. And it's not going to happen overnight. This is something that's going to take a very long time to occur. And in fact, China has their own reserves of gold as well. So it'll be a diversification process that has started, but it'll last many, many years.
All right, now gold is well ahead of predictions made even a year ago. Given this rapid rise, though, is there a danger of a bubble forming?
Look, that's the interesting thing which we've all been analysing. We actually looked at 1,300 for us as a key level, which the market hit and has just come off a little bit from it. But it is interesting that it doesn't feel like a bubble is actually forming. We see these moves in gold which are quite related to the quantitative easings that the US are currently undergoing. And whenever we see this easing, or Bernanke talking about an easing, we see a spike in the gold price. So I think that whilst we see the US policy for quantitative easing continuing, I think we will continue to see gold move higher. I think it's slightly different to when we saw oil push through 100 onto 140.
We've seen a lot of spikes in the gold price since 2001, where it was at $250.
Oh, look, we have, but the market seems to be taking on different ideas. and different reasons. And if you think that more people want to hold gold, not just via the shares, but want to hold gold because of things that occurred in the economy, things which are diversity, all these sorts of things, the supply-demand picture actually blows out, so we actually don't have enough supply.
So where do you see the price heading, Jonathan Barratt?
I think we've got to really look and take it on a new highly basis. 1,300 is a key level of resistance. If we take out 1,300, where we continue to see quantitative easing in the States, which debases the currency, then gold can continue to go to 1,350, 1,400. But I think it really all has to do with the policy that the US, that the Fed decide to embark on.
It's an awkward investment. Most people don't want to just, hold on to bullion directly under their bed, so to speak.
It's actually
What's the easiest way for people to invest in gold?
Well, it is. People can invest in small amounts of gold, and it is a wonderful thing to hold a kilo of gold or a couple of gram bars. It's just its colour is just very, 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 very illuming. But some of the easiest ways to look at and to invest in gold are via some of the trusts, the gold trusts, shares, through options, through warrants. So these days there are a lot of products that people can look at. But mind you, just holding gold in your hand, it's not a bad thing to do.
So it's okay to keep it under the bed?
It's okay, but don't tell your neighbour.
Okay, let's look at another precious metal. Silver, it's jumped to 30-year highs. What's the attraction there?
Silver is good because we are at an issue where we have a supply issue. But silver is also interesting because it's kept as a precious metal, but also has a very wide industrial application. So you can see the attractiveness from two areas. We come out of an economic recession, then people will look for more silver from the manufacturing. If we have concerns, people will go to it. So silver has a double attraction to it, which suggests that it can go a lot higher.
Is it attractive because it's cheaper than gold?
It is, and I think there's a little bit more gain in it as well. So I think there's two things towards it. And I think silver over gold probably represents the best opportunity if you think that gold is too high.
All right, Jonathan Barratt, we'll have to leave it there, but thanks for joining the program
today. Thanks, Whitney.